Hi, my name's Allan Madan. I'm a chartered accountant and tax expert in the Mississauga, Toronto, and Oakville regions of Ontario, Canada. Many of my clients are dentists, and that's why today I'm going to talk about the 3 different types of structures for dental practices. So make sure you watch this video because it will be beneficial for you. The first type of structure for a dental practice is known as a locum and principal arrangement. In this arrangement, the dentist, you, covers for the principal dentist's absences. The principal dentist may be absent because of illness, vacation, or other reasons and needs you to cover for him or her while he's away. This is a very short-term arrangement, as you can see. The office of the principal dentist bills the patients for your work. However, you receive a percentage of the billings to compensate you for your professional services and efforts. While it's fair that you pay for some of the common expenses of the principal dentist's practice because you're working out of his facility, you want to make sure that the common expenses are not directly deducted from your percentage of the billings. The reason being is that if those common expenses are directly deducted, then HST will be applicable. A better way to go around this, to avoid HST, is for you to reduce the percentage of the billings that you receive for the work that you've performed, and that will help compensate for the common expenses. Now, common expenses include such things as rent, utilities, administration, payroll, and other common costs. The second type of structure for dental practices is known as an association. This is very similar to the locum and principal relationship, but it's for a much longer period of time. In this structure, you become the associate of a principal dentist. The principal dentist bills the patients for your services, and again, you receive a percentage of the billings. Make sure that the common expenses are not directly deducted from your billings because HST will be then charged on those common expenses, which becomes an added cost for you. The third type of arrangement is known as a cost-sharing arrangement. This is a very common structure for dental practices. In this structure, both dentists operate their individual practices from a common facility, and each of the dentists that are party to the cost-sharing agreement pay for their proportionate share of the common expenses. There are 3 main characteristics to a cost-sharing arrangement. Number 1, the principal dentist pays for all of the common expenses of the dental practices, and those common expenses include utilities, rent, administration, payroll, lease costs or capital costs for furniture and equipment. The principal dentist is reimbursed by the other dentist for their proportionate share of the costs, which is only fair. The second characteristic is that a common bank account is maintained to cover for all of the common expenses. Each of the dentists, including the principal, should periodically deposit a sum of money into the common bank account to make sure that the bank account has sufficient cash available to pay for expenses. The third characteristic is that each of the dentists is responsible for paying for specific shared expenses, and this will be typically laid out in an agreement. The advantage of a cost-sharing structure is that each dentist has the ability to operate their own independent dental practice, while at the same time reducing their overhead by sharing it with other fellow practitioners. The payments between the dentists will not be subject to HST if this agreement is structured properly. If you found this information useful, I encourage you to visit my website, which is shown at the bottom of this video, http://madanca.com. And also, I encourage you to access my free report, 20 Tax Secrets on How to Beat the Tax Man, which is shown at the end of this video. So go ahead, visit my website, get access to your free report, and save yourself a ton in taxes. Thanks for watching.